2024, India, the next superpower. 2026, don't invest in India.
I think one thing is very, very important, which I've learned over time. The moment you are not getting sleep in the night and you're waking up in between thinking of some crappy stuff which you have done, that means that thing is wrong. If you're coming in my good cycle, then be prepared that in near term there could be some amount of volatility.
We listen to Ramdev sir all the time, and he has been a strong advocate that in next 10-11 years, which is approximately 76,000 as we speak. So is it still the base case?
Pitch पे रहना जरूरी है, to experience.
Experience, right?
So how unlucky you can get.
2-4 bouncers आएंगी,
सब कुछ होने वाला है,
Yorkers
सब
आएंगी,
कुछ होने वाला है. सेल का बटन दबाना अगर मजा आता है ना तो फिर पैसे नहीं बनते. There is nothing called shortcut in wealth creation.
What is the take of Motilal Oswal as an AMC on this? Is it just a temporary shift?
Yeah.
Or something has really changed to which we people are, or normal investor is not aware of? In 2024, every headlines was India is the next big thing. India on the verge of becoming a superpower. Sensex at 1 lakhs. These were the headlines. Fast forward 2026, everything has changed. All the headlines are now rupee is dead. India's story is over. Same platform, same people, but the narrative has completely shifted. So today, to discuss and to understand, is this just a temporary phase or something has really changed? I have with me the man himself who leads business for one of the largest AMCs in India. I have Mr. Akhil Chaturvedi, Chief Business Officer and Executive Director at Motilal Oswal AMC. Hi Akhil, thank you for coming and taking out time.
Thank you, Avdesh. Thank you so much.
How was your day so far?
Day was relaxed. The markets have been good today, so pretty okay.
Okay, great, excellent.
Yeah.
So Akhil, I see a lot of podcasts and they directly deep dive into markets and everything. But before we do that, are you comfortable if we talk about a little about you and how did you enter the markets?
Yeah, certainly, sure.
Great. So if you could please tell me a little like where did you grow up? If you had any insights about the market.
So I'm born in, of course, Mathura, a small city near Delhi. And then brought up in Mumbai.
Mm-hmm.
My dad is a chartered accountant. He
great.
continues to practice as a CA. So being in a family which has been oriented towards finance and commerce and business, and my father has also done plenty of things in real estate. He was part of a firm which also got listed when I was very young. So the initial part of my life when I was growing, when I was 15, 16 years old, so I got awareness about stock markets because around 91, 92 is when this whole big bull run, the Harshad Mehta bull run, which was ongoing, and that is the time my uncle's company was getting an IPO. And in my vacation days, I used to go and sit in his office in Andheri, close to my place. So I used to just I had 15 years, just see what's happening. And there used to be a lot of excitement, a lot of money was being made. I think the IPO was at 10 rupees and the stock went up to 60 rupees. But those days, the markets were actually not as transparent or as regulated as it is today. So some of the things at those times we used to hear about how to run your stock up and how to do many things which used to get managed at that point of time. And the market cycles also were very, very short. And, so Harshad Mehta's thing lasted for about 2.5 years. And then when it came to an end, obviously there was catastrophe. A lot of people lost a lot of money and there were suicides and I don't know what not happened at that point of time. And then you had the Ketan Parekh bull run, and that was again short-lived. Then there was a crash. He went to the jail again. And then immediately in 2-3 years, we had the global bull run around the IT sector, the tech bull run. So between 1990 and 2000, there were like 3 major bull runs, and then there was bust of each rally, which I lived through while I was studying. So those days, the perception about stock market was largely that this is a bad business to go into.
Right.
This is not your future. This is not your career. This is speculation. This is like a gambling. This is what I used to hear from my
Satta
mom.
bazaar.
My mom, and she like, this is one place where you're not going for your career, right? So yeah, so that was the initial part, and as God had it, I actually came into like the heart of stock markets, and my career began in 2000 with Birla Sun Life mutual fund.
Right.
It just when I was entering into the asset management space in 2000, that is the time it was at the peak. The IT bull market was at the peak.
And the dot-com bubble happened as soon as you joined.
And the bubble happened, right? So, of course, we saw a lot of carnage. And when I entered Birla Sun Life, the 2 popular funds that time were Birla Advantage Fund. I think Birla Balance Fund also was popular, which had a heavy weight on the tech sector, because that's how everybody the money was being made. Yes. So, I've seen the NAV goes down by 50, 60, 70%. And then we had to go and talk to clients and try to... So that was the initial kind of...
So what was more challenging, talking to the clients or talking at home at that point in time and still convincing the parents कि नहीं इधर बन सकता है career?
No, so parents, I've been lucky. My parents really didn't interfere into eventually what I did, what I didn't do. They just wanted to see me successful. So that was not a challenge. The challenge, of course, was that when you start your career, you are just about understanding what markets are all about and why did the markets go up and why is it falling and all that stuff. At that point of time, if you're in a firm trying to defend the underperformance or the negative returns, so meeting customers and trying to give them the comfort. I mean, literally, I've got abusers at that point of time. When you lose 50, 60%. But yeah, so I think the good thing I would say in this whole thing was that the initial learning itself was the hard way.
Right.
Before you sell the excitement, first you learn how to manage the downside. So I think that training, the initial training was good, more from my personal learning perspective. Also, what are the nuances of equities and how it generally does, how it behaves, I mean, typically we say there are do's and don'ts of equity investing, right? So those were the initial lessons which I learned. And that has helped me, talk to all of you and, investors. Actually, I enjoy meeting customers in bad times. Because in good times, everything is good, money is being made, so whether you go to them or you don't go to them, money will come to you. But in bad times, you have to be up the mark to understand that what's happening, why did the markets go down, why will it come up, understanding what were the issues, why the market. So you tend to read a lot, you tend to understand the issues more, then you tend to create a storyline to explain to people that what's happening around, and then to think long term, right? So I think there are more intelligent conversations in bad times
happening
than in good times. So yes, it is tough, but somehow within my heart I really enjoy this phase.
Amazing. And probably this is something we all can learn from you, that enjoy the downside, because it has to happen sooner or later. So let me ask you on this. When did you pick up your biggest check? Was it in the downfall or was it when the markets were rallying?
Okay, good question. So the biggest check, of course, now we've done very large deals.
At the beginning of the career, I'm talking about.
Beginning of the career, my first big deal was when in 2002 I was transferred to the Bangalore branch, and I did some networking, and I happened to land up in one of the biggest IT families. I'll not name the name out here, and there was I think there was a massive dividend which was announced in 2003.
Okay.
And we knew, we had some idea about that, and so we were networking with that group for a large allocation for portfolio management services.
Okay.
They wanted to give that large pot of, I mean, this number was I think 1,200 crores back in 2003. So they wanted 2 managers for creating a unique or exclusive portfolio for their family. So We pitched. I took the fund managers there. We created the story, and a whole bunch of things we had to do. Eventually, we got those days in equity, getting a 700 crore. So on 1200 crores, we got a 700 crore allocation. In equity, in a boutique PMS of Birla Sun Life. And it was an exclusive strategy for the family. So 700 crores, 2003, first 3 years of my career. And the reward I got was that I was then moved back to Bombay. So from Bangalore, I said, my MD at that point of time, he said he called this boy to Bombay, and I wanted to come back to my hometown. So I got the opportunity to come back because of this particular deal.
So just on a lighter note, when you picked up this huge amount of check, are you able to recall that night, or no memories?
Yeah, damn good. So there was a intermediary in between, a friend, very, very, very good friend of mine. He used to work with ABN AMRO Bank that time. Now he's running his own practice. I don't know if he listens to the podcast. I'll share with him. So he took us over there. So he was the distributor then, and so we were close. Our families were close. So in Bangalore, me and my wife, he and his wife, we generally used to meet up. So that night we celebrated at which was
World Cup like celebration.
ITC Windsor.
Okay.
Right. Those days salaries were not big, but that day we made we went to this Peshawari, right? And we spent like 25,000 that night.
At that
just
point.
that excitement of, getting that big check, big deal, right? So
I guess it's the bill that you remember right now.
Yeah, I think you only paid it, but I remember the bill was there. It was pretty high. Yeah.
So that was about, when you picked up your biggest check. When did you actually start investing your own money in the markets?
So I started investing right from the first 3 months when I started to work. So my first experience was not a great experience because, as I told you, it was a tech boom going on, and there was a fund which was launched, which was an IT fund. Because that AMC doesn't exist now, Alliance New Millennium Fund. In fact, at the end of the day, Birla Sun Life only picked up or acquired Alliance Mutual Fund. So they had a New Millennium Fund. It was an IPO focusing on tech sector at 10 rupees. I put 10,000 bucks. After 1 year, I sold at 2 rupees. So the first investment I made in mutual fund was losing 80%.
You lost 80% of the money.
I lost 80%. Didn't bother me too much. 10,000, you can manage it out. But yes, again, bitter lesson learned very, very early days.
At the early stage.
But then, those days regulations were not very tight for people who work for AMC. So I did all kinds of things. I've done direct equity. I've leveraged futures, options, IPOs. So all these kind of jazzy things just to try and get rich very, very fast. At the end of the day, after doing 4-5 years of this kind of investing, at the end of the day, I was back to zero. So in 2008, Lehman crisis is where whatever little bit I saved and made money and all that stuff. In 2008, global financial crisis, it was all gone. Everything was gone, zero, right? Then I said, because at 2008, then obviously, I was married. I had my son who came in. I had a daughter also. So then, you start thinking seriously about future and you need to have some corpus and all of those things. Then I started the simple plain vanilla mutual funds, put 30% into SIPs, and that continues so far.
Right. So if you don't mind, it's a very important point that you mentioned, that people start putting a lot of their money in equity before, even though they don't understand it. And you were somebody who already had experience of 7 years by 2008, right? And then you decided, okay, now I'll start investing in mutual funds.
Yeah.
And that what we also tell people, that you have a cash flow. It's a pyramid. You have a cash flow. Then you build you need to have adequate insurance, emergency funds, plan for your goals. And then probably if you have money, you go for speculative assets like buying equity or crypto or something.
Yeah.
But I guess most people
last part should be avoided completely.
Okay.
The last part you should do when you have plenty of money available with you, right?
Okay.
Otherwise, till such time you have enough wealth which can cover your full lifespan, including your retirement. Don't play with anything which is highly, highly speculative. Just do basic investing, regular investing, and be happy with 12-13% compounded. If you can achieve for 20-30 years, you're sorted out for your life. But yeah, if you manage to make a lot of money, a pot of gold, you have 50, 100 crores, you want to put 5 crores, do it.
Right.
And if you have 5, 10 crores and then you want to put 2, 3 crores there, then there's a problem.
Any message that you would want to put across? Because a lot of people, try their hands at the beginning itself in equity markets, they end up losing the money and now they don't even enter the markets.
Even if you want to try it at the beginning of your career. Don't try it in the middle of the career or at the last phase of your career. Because in the beginning, you have 30, 40 years to work. Your risk appetite can be high and you can earn back and you can get back on track, right? Which happened with me also.
Right.
So first 2 years, you try whatever you want to try. You want to try Bitcoin. You want to try futures options and get your learnings, get your lessons fast. Because till such time you don't lose, you don't understand what is the difference between right and wrong. So losing is very important before you really go in for creating a lot of wealth. I would say, but whatever you do, please do it early part of the career. Even if you're very tempted to do later on in your career, make it very, very small portion, as if you lose that, you will have a good sleep in the night.
Right.
One should not, the moment you are not getting sleep in the night and you're waking up in between thinking of some crappy stuff which you have done, that means that thing is wrong. So
but right now,
these are the indications environment. That is very, very different.
Right.
So we are talking about asset allocation. So when you're talking about asset allocation, doing something which you understand versus doing something which you don't understand.
Right.
If you're doing something which you don't understand and it is giving you sleepless night, don't do it.
Right. So that's where I want to ask you a question. Let's say if 35 years old guy come to you right now and tells you that he wants to put 5-10 lakhs in direct equity and he has 0 mutual funds, what would be your answer?
0 to direct equities, 100% to mutual funds. And then depending on the tenure of investment, depending on goals, depending on liquidity, one can decide between what kind of funds you want to put, debt funds, equity funds, within equity, large cap, mid cap, small cap, within debt, liquid, short term. So there are many options depending on your goals.
So we'll come back to this asset allocation. I have like few more things which are brutal right now.
Sure.
So 2024, India, the next superpower. 2026, don't invest in India. Like the complete narrative has changed.
Yeah.
What is the take of Motilal Oswal as an AMC on this? Is it just a temporary shift? Or something has really changed to which we people are, or normal investor is not aware of?
No. So I think after COVID there has been after COVID there was a dramatic shift, but the shift of financialization of savings started after demonetization. So because I'm part of the industry, we could see that after demonetization 2017 onwards, I don't know what happened, but suddenly we were seeing a lot of retail participation, a lot of new investors were moving into mutual funds. If you see between 2016 and 2026, the SIP, the total SIP of the industry probably has grown from 3,000-4,000 crores to 30,000 crores. So the real transformation of investing in mutual funds, investing in equities, investing in SIPs started post demonetization. And then COVID was another event which happened where when the markets recovered and people were sitting at home, so we all know a lot of people were opening demat accounts and broking accounts, and at that kind of market level, there was a lot of interest in the stock markets. And so after that, there has been a tsunami. So we have seen almost like 2.5 crore new investors who have come into the mutual funds. SIP book is doubled or more than doubled actually in the last 5 years. And broadly, people have had a good experience in the last 5 years. Despite that, the markets have been fairly stable till 2024. Yes, last 1.5 years, markets have consolidated. Valuations were very pricey. Now they're getting very attractive. So reason could be anything, but markets will go through their cycles of euphoria, exuberance, and phases of completely reverse. Right, and they can, and that is the time market will test your patience. That is the time they will test your longevity. Whether you deserve to create wealth in market or not is tested when the markets go down. Now, to your question, I think if you see the industry numbers itself, and I think we spoke earlier on also, on a 12% correction, we have seen one of the highest flows, gross flows of 80,000 crores and more, and net of 40,000 crores, 1,000 crores additional on the SIP, 31,000 becomes 32,000. This means that the Indian investors have come of age. They have understood that this is the do's and the don'ts. They have probably understood.
Is this the new India?
This is the new Indian retail investors. They are like standing rock solid to participate in the growth of Indian economy through the Indian capital markets, through the mutual funds in the right way. Right. So there is a big change, and it's really surprising, and it's very good, and it's very positive for the investors and for the entire industry.
But about again moving money from India to different countries, like for example, South Korea gave you 80% in last 1 year, but their 5 years average is 2.2%. And suddenly everybody's talking South Korea, US and all that. So let's say somebody who wants to create a lot of wealth in next 10 to 15 years, do they have to worry about anything that has happened in India?
Yeah. So see, there is an evolution which is happening in the investment landscape, right? So 25 years back, when we were building this industry, that time we used to explain mutual funds, we used to explain SIPs, we used to explain equity funds and all those things. From there, today mutual funds have become commoditized, right? There's so much of everybody understands everything. You don't have to explain anybody. In fact, there are school courses which covers what is mutual fund, and basic part is covered.
And that's a good thing
in school courses, right? Now, over the last few years, as thanks to all the information advantage and the social media, digital media, so much of information, and now we have artificial intelligence. People understand that what's happening in India, what's happening in US, what's happening in China, what's happening in Taiwan. Everybody knows what's happening in their economies, what are the new innovations which are happening, which economies are doing well, which economies are not doing well, which stock markets are doing well, which stock markets are not doing well. So that advantage itself is basically creating that curiosity to also participate into multiple assets, multiple countries, which is again a very, very positive from a asset allocation perspective, diversification of risk perspective. So, and now you have also avenues available to invest outside of India. Right. So if US is doing very well, then yes, you must put some money in US. You feel if emerging markets are doing well, then there should be some small allocation into emerging markets, right? So one has to diversify, and it's a very big positive. Yes, I can say, or your question is valid, that it's a very natural human behavior that you will tend to follow the momentum. And if the momentum is in US or it is in Korea, then you feel, yeah, am I missing that FOMO thing? It pushes you to buy into assets which have done well. Like last year, for several months, we saw people were really chasing gold and silver, thinking that something outlier is going to happen, and we have missed out. And so people will try to follow wherever the returns are being made. And that's very natural, which is where your job will come into play, that to explain to people that if something goes up too fast, too soon, then it also will correct.
But Indian story remains intact, right?
India has to be core allocation because we live here. We are fortunate that we are living in an economy which is a growing economy. We are still a developing market, we are still an emerging market, and we have 30-40 years to become a developed market. We have great businesses here, we have great entrepreneurship here, we have technology here, we have regulators here. So what else do you need for, if I have to put my risk capital into some country, then India is really standing very tall in terms of safety, right? And then it is a country which is full of young people, aspirational people, young kids who are going to get into working population.
Demographics.
So I can go on and on to explain India. So we are lucky that India growth story, and for 20-30 years. So you're very, very clear about all of those things. So therefore, I think your core allocation should be in Indian markets. Let's say on 100 rupees, 60% should be Indian equities. On 40%, you can do your global commodities, all of the other things. Because in investing, one thing is very, very important, which I've learned over time. I've not practiced too much, but I've learned over time, is that that when you're investing, you should spread your eggs in multiple baskets, not put all eggs in one basket. It's a very, very important tool to de-risk yourself into events like these. So events like this kind of a war which happens, which is shaking up the whole world.
To increase the longevity of your portfolio.
To reduce the volatility in your
Right,
portfolio, you diversify your risk.
Right.
Because everything doesn't fall at one go. Right. So in bad markets, some different kind of asset classes will do well. In good markets, some other asset classes will do well. So if you have a combination of all, your portfolio will be it will fall down relatively lower, albeit it can actually give you positive returns, right? So as an investor, my message is always one thing, that don't chase one asset class or other asset class just because past 1 year returns have been phenomenal. Look at opportunities where returns can come, and today it is looking relatively lower. So then you're going to buy at lower levels and you can participate in that. So that vision has to be there to see what is the next opportunity rather than loading onto an opportunity which is already played out.
Right. That's very well put. And I was recently attending a seminar of Ashish Somaiya sir, and even he said, shoot where the rabbit will be and not where the rabbit is. Do you still have because probably this will translate into your conviction in India story.
So see, he's a visionary, and I hope whatever he says comes true, and that's actually how it has been playing out in the last 3 or 4 decades. But yes, if you just do simple mathematics, if the markets can grow at a 12% or a 13%, every 6 years markets will double, right? So I'm saying 12%. His calculation is more at 15%. So 3% makes a lot of difference. But even if you take 12%, then today Sensex is 80,000, right? So in 5 years, 80 should be 160, and in 10 years, 160 should be actually more than 3 lakhs, right? So yes, at 12% itself, if you just remain invested in the top 30 companies of BSE, and that gives you a compounded annualized return of 12%, then you're looking at 4 times. So 18 to 4, 360, 3,60,000 is what is possible by 2036.
But we are on the right track to that journey.
Because this is what has happened in the last 30, 35 years, right? Now I'm not just shooting these numbers. Where does these numbers come from? These numbers come from, first you have to look at what is your nominal economic growth. What is the GDP growth? Now, if your nominal GDP grows at 10, 11%, then the corporate India or the corporate Indian companies' profits will grow at 13, 14%. And if the profits are growing at 13, 14%, then the market cap also will grow at 13, 14%. So that is the whole chain which gives us the sense that, okay, what is the future looking like? This 13% of price growth doesn't come from a different world. It comes from some calculations, which is largely dependent on corporate earnings, and corporate earnings is largely dependent on the economic growth. So all 3 parts are very, very important for markets to do well.
Right. And just want to know, what do you think, that is there anything that can derail us from this journey?
In long term,
what can be the long
I think in long term we are headed towards the right direction. The goal is very clear. If I think by 2047 we should be a developed economy. I don't think that the possibility of that to not happen is not there. I think it is very much there. There are a lot of ingredients we spoke about: young population, intelligent. The number of people who are studying now is also moving up. So we have a productive population, and we have an intelligent population, well educated population, and they will drive the economy to at 10, 11%. If you grow, then by 2047 you are a $20 trillion, $25 trillion economy.
Amazing.
Right? But वो होगा 25 साल में, right?
तो 25 साल टिकना पड़ेगा मार्केट में.
See, India का, you see, this is the wealth creation done by Ramdoji. There are 2 wealth creation, if you are investors, or you should read to understand long term versus short term. See, from independence, we were zero, right? Zero economy. So 1947 to 2007, it took almost 55 or 60 odd years to become a $1 trillion economy. From 2007 to 2025, almost 16 years. It took us 16 years, so 55 years to hit the 1 trillion mark. 16 years to grow from 1 to $4 trillion. Right? अभी इसी रेट पे आप ग्रो करोगे तो अगले 17 साल में this $4 trillion will be $16 trillion.
Right.
17 साल में. तो $16 trillion में मतलब if the economy is $16 trillion, then the per capita will be $10,000. So we are heading towards the right direction. But in between there will be pauses, there are going to be stops, there are going to be challenges, there will be issues, and we will all navigate through these issues, right? So see, in the last 5 years, 6 years now, right from a health crisis to wars to political uncertainty to geopolitical, reorganization. So, what all have you seen? Despite that, things are moving forward.
Right.
It's not that the world has become 0% on growth. It's not that India has gone down to 1% of growth. Right. So there will be pauses, there will be speed breakers. It could basically advance your growth or it can derail your growth by a couple of years here and there. Had COVID not happened, we would have become $4 trillion maybe 2 years before.
Okay.
But COVID happened, so wo ek saal delay ho gaya because you degrew in that 1 year. Right. Had this war now not happened, our growth would have been 7.5%. Because the war has happened, maybe we'll grow at 6%.
6%.
तो आपका 1.5% hit लग गया. तो ऐसे ये चलते रहेगा ऊपर नीचे. Right. So इसलिए वो you have to have that vision.
Right. So I mean that's very great insight, and since we now know that India's story is intact, so for our audience, I want to understand. Let's say a 35-year-old man comes up to you at any social occasion, and he has a daughter, he has like enough emergency corpus, but does not understand the markets. थोड़ा बहुत past में किया, SIP में डाला, but मजा नहीं आया. Abhi now he comes to you, he says that net of expenses, after all the expenses and everything, he can invest 1 lakh rupees with like growing or step up SIP for next 15 years. So I would want to understand what would be your advice in terms of asset allocation for him.
So I would say in the current context, I would say that do a 10% SIP, accumulate gold in financial format. So 10% gold should keep accumulating that, given where we are, right? Then I would say that, and I'm assuming that he has his emergency funds with him, right? So that is on the side. So the balance part, I would say maybe 15% or 20%, for simplicity, 20% into international assets. So you put in 10 in US, 10 in emerging market, right? So your 30% is well set. Right. Now the balance 70, you can do 20% large cap mutual fund SIP, 50% do mid and small cap. हो गया आपका काम. Done.
Okay. And stick to it.
Just stick to it.
Okay. And how often do you nowadays people have this habit, and fortunately or unfortunately, there are a lot of applications as well that are pushing the data every day to your mobile phone that this fund is not performing, that fund is not performing. And funds go through cycle depending upon their style. So आज मैंने यहाँ पे लगाया, कल मेरे को किसी ने एक मैसेज भेज दिया, योर फंड इज अंडर परफॉर्मिंग, दूसरे में डाल दो. अगेन उस कंपनी का, जो भी कंपनी है, उसका तो धंधा ऐसे ही चलने वाला है. वो 6 महीने बाद फिर आपको बोलेगी कुछ और चेंज करो, क्योंकि अगर वो आपको नहीं बोलेंगे चेंज करो, देन दे आर नॉट एडिंग वैल्यू टू योर पोर्टफोलियो. बट माई क्वेश्चन इज, people need to understand कि they have to stick to a specific fund or a specific style that they have chosen. Right. So, and I guess
it's a good question.
That what creates the gap between fund returns and investor returns.
So I would say that stick to your broad allocation at all points of time. So you have to be like buy and hold on the allocation I've given you, 10% gold, 20% international, 70% India. That shouldn't change. Right? So that means you're participating in each asset class for next 15 years. That doesn't change. Now, within these asset classes, you have bought, let's say, 3 or 4 products, right? Generally, these products need to be reviewed every 1 year. I think 1 year is a good time frame just to have a optical view that, okay, is things fine, not fine, funds are doing well, not doing well. Possibility, if a fund is not doing well, give it another 1 year, 2 year. I mean, at least give a 3-year cycle, first 3 years. To see that how the manager is doing, right? If you're happy, pull on. If you're not happy, you can anytime decide to move from one fund to other fund, but remain invested. I mean, the first message is to remain invested, right? Also, in doing this you need, it's a subject where you need help. So I always recommend people to have your financial doctors, or which are mutual fund distributors, who will decide that which funds, how they are positioned, when they will perform, why are they falling, why will they come back. So let that decision of which medicine to be taken be left to the financial doctor.
Correct me if I'm wrong. I guess analysis can be done. Like if you mentioned, you gave an example of a doctor. What I believe is more than a doctor, because they know कि analysis हो क्या आ गया, blood samples क्या है. They need a wealth therapist. कि panic हो रहा है, क्या करूं?
So doctor एक तरीके से therapist भी होते हैं, right? So the financial doctor will decide which medicine has to be given, what therapy has to be given, right? Therapies are needed when there is acute pain,
right,
or where there is something which you're not able to figure out. So which is like falling markets, volatile markets. That time you need to give therapy, right? In normal markets, you need to give your regular medicines, right?
So a combination.
So it's a combination of both. And in financial, when you talk about financial doctors, they exactly do the job of giving you medicines, giving you therapies, giving you counseling, all of those things. And that is that beauty of a mutual fund distributor. But because you are doing your own job. You may be an engineer, you may be a doctor, you may be working in some other business. You don't understand what mutual fund, why to buy, which to buy, when to sell, blah blah blah. So you have enough option now available. Take help. Let somebody do that job for you for a small fee.
Right.
They'll manage your operations, they'll manage your cash flows, they'll manage your if all the legality part. Something happens to you, they can take care of the succession planning, legacy planning. So it's not, one thing I feel that people in India generally try to take things very lightly or for granted. Right? सब ठीक है, सब ठीक ही होगा, हम सब 80-90 साल जी लेंगे, कोई मतलब nobody plans for risk, right? So planning for risk is very, very important. That just in case something uneventful happens,
right?
Then where are your finances? Where have you kept? Who has account of it? There is where the financial doctor, mutual fund distributor, they all come in play to sort this out for your family, just in case something happens.
Right.
Markets are going down, you are tempted to react, then you need therapy, coaching, hand holding. Who does that? So leave all this, which fund is performing, not performing, all that stuff to the mutual fund distributor. Just control your behavior of allocation and everything else will set.
Right. So here, I would want to talk about 2 pain points. One probably you would have, and one that we have as a business owner. That when fund performs, fund reaches at the peak, that is most when investors jump in, and as soon as, because every fund has a style. And if I'll talk about Motilal, Oswal, flagship funds, you guys take concentrated bets, and which is a little high on the price to earning side. And we have been conditioned that anything beyond 20 PE is expensive. So to your investors who have invested in your funds, any message that you want to give to them?
Yeah, so we are a very, very differentiated asset management company. Our fund management philosophy, processes, fund creation is very, very different. In a very simple way, we are very clearly positioned as growth investors. We focus on companies where earnings growth is at least 3 to 5% higher than that of the benchmark. And we believe in focused portfolios, not concentrated portfolios. Focused portfolio means that if you have identified, done research, your homework, hard work, and you've identified 25, 30 companies, then you have to put meaningful allocation in that. You cannot be putting minority allocation. You have to put a major allocation. So therefore, we believe that the more stocks which get into the portfolio, the more it eats away into your outperformance. So lesser number of high quality, high growth stocks. And if you have bought those stocks at a good price, that will take care of your downside. It will take care of your volatility, and it will give you the reward of being focused, of being backing high growth companies, and that reward will be the outperformance over the benchmark. So from that perspective, we are very differently positioned. Yes, our style will also go through cycles of very good performance, bad performance, volatility. Everybody goes through. We will also go through. So and if you like somebody like us, then actually you should be doubling up your investments in our bad cycle to enjoy the good cycle.
Okay.
Right. So if you're coming in my good cycle and hoping that good cycle will continue forever, then that is probably not going to happen.
Right.
If you're coming in my good cycle, then be prepared that in near term there could be some amount of volatility. Right. So be prepared for that, but we are good, so we'll come back. Right. So eventually everything falls in place. But that interim phase when if you feel that this fund is not doing well, then you need therapy again. But otherwise, if you don't want to be that if you don't want to experience the initial pain, then the best time is to buy at the bottom.
At the bottom.
Right. So like, we are speaking in 2026. I'm purposely saying 2026 because if somebody hears the video in 2030, you should know the reference point. So in 2026, last 12 months have been little headwinded for our style of investing. Companies and sectors which are relatively known for high growth has got corrected, and money making happened in the value style of investing. Right. So last year actually, if you tend to see, was one of the best years to add more money because we were headwinded, our stocks were correcting, and therefore the valuations were coming down, and therefore you have to buy low, sell high. Right. So, and that is what I've been trying to explain to everybody, that best time to us is when we are doing the worst.
Okay.
Right. So that time don't worry. That time get excited. I like this fund. Today it is at 100 rupees, I'm buying. But tomorrow if it is available at 80 rupees, I'll buy more. And this you can do with all the funds you like. Right. And there are multiple managers. So you can identify 4 or 5 good fund managers where you want to give your savings. And then you participate in those fund managers across their good times and bad times. It will give you the opportunity to average. Right. And then in long term, it's like everything is fine.
Right. So it's not just about your funds. I mean, you mentioned
everybody goes
positioned,
through it.
right?
Everybody goes through
Now, the challenge that we see day in, day out is most of the investors came after COVID, as you very well mentioned, and they have not seen good market corrections. Right. So as soon as there is turbulence of 5, 10, 12%, they are like mayday, mayday, mayday.
Yeah.
They don't understand that it's the nature of the market to correct 20, 30% at times. And that's the opportunity which you get to create wealth. And at the same time, if that is not happening, then SIP investors will fail to make a decent amount of money, because recently I was listening to Mr. Prashant Jain. We don't need to introduce him, everybody knows. And he mentioned that because of strong DIs flow, the volatility would be lesser, and hence SIP returns would also be lesser, because वो आपका averaging ही नहीं हो रहा है बहुत नीचे के भाव पे.
Correct.
Right.
नहीं तो ये इसलिए बोल रहे हैं, if you don't want to experience this kind of volatility downside, you have to have your allocation strategy right. See, देखो दो टाइप के इन्वेस्टर्स समझो. There are 2 type of investors. One type of investor is that I don't care, markets go up, markets go down. I have committed a 10,000 rupee SIP for 10 years and it will be honored and it doesn't bother. Right. So after 10 years, this guy will wake up and he will see that, okay, I've made my 15, 16%, whatever that number is. Right. Then there's a other investor who's just trying to buy on the top of the market cycle, and every top of the market cycle is. So what is happening then, like Prashant Jain says, is that you're not averaging, you're buying on from one top to other top. This investor will make 3-4% lesser than the investor who has been more disciplined and been a regular investor. Right. There's a third set of investor we can talk about who buys all the bottoms. So every bottom he's very lucky that he can get the bottom right. So every bottom he'll make 2-3% higher than the regular investor. तो अभी आपसे बात करते करते ये आ गया है मेरे को. So there is a regular investor, no market timing, continues to invest, makes let's say 15%. Somebody who's getting the bottoms right will make maybe 17-18%, and somebody who buys only tops will still make 12%.
Right.
तो आप कुछ भी कर लो, आप अगर करते रहोगे तो पैसे तो बन जाते हैं.
Right. और बॉटम ढूंढने के लिए दिन रात आप लगे रहोगे.
But अगर रहोगे तो see, the whole problem is that please remain invested. आप पूरा बाहर निकल गए. If you're out of the game, you're retired, hurt, finish. So you have to, आपका पैर में हर्ट हो गया तो भी आप क्रिकेट पिच पे रहो, आपको पेट में लग गए तो भी क्रिकेट पर पिच पे रहना जरूरी है, to experience, right? So how unlucky you can get.
2-4 bouncers आएंगी,
सब कुछ होने वाला है,
Yorkers
सब कुछ होने वाला है. See, if you look at any sport, is a very good way to understand investing behavior. Like in any sport, it happens. You get hurt, you get slow. Some days are good days. I mean, cricketers, Virat Kohli has had very, very good days, very, very bad days. तो सब कुछ होता है. Straight line में ना अवदेश सिर्फ फिक्स डिपॉजिट है.
Right.
ठीक है, आपको ये सारी चीजें कुछ नहीं करनी है, ये सब झमेला लगता है. ठीक है, तो बी हैप्पी विद 6-7%. आप करो डिपॉजिट.
थोड़ा डीप हो जाएगा, बट द क्वेश्चन इज कि अभी आप लोगों ने एक्सपेक्टेशन सेटिंग बहुत हाई कर दी. जैसे
हमने कोई एक्सपेक्टेशन सेटिंग नहीं की.
नहीं, विद द परफॉर्मेंस दैट यू गाइस हैव गिवन. अभी कोहली का भी वैसे था कि दो ही वाज डूइंग बेटर देन द एवरेज, बट बिकॉज सेंचुरी नहीं मार रहा था तो पीपल स्टार्टेड क्रिटिसाइजिंग कि क्या कर रहा है.
सेम, दैट्स व्हाट इट्स. See, rather than criticizing other people or criticizing mutual funds, criticizing fund managers, do self-introspection, right? So self-introspection is that, I mean, money, people have made money, markets are making money for you, investor return and investment return, you spoke about this concept. The investment return is compounding. Investor return is compounding less than the investment return compounding. That means that, let's say, in the last 25 years since Nifty was born, right, it has grown from 100 point to a 25,000 point, right? But that's 25 journey fully invested in top 50 stocks across all times. Who has made this? Nobody, right? So one has to be, that's what I'm saying, you have to be remain, once you've decided on 100 rupees, 60 rupees is equity for 10 years, then you remain invested on the pitch for 10 years to experience it. In that period, you will go through all the ups and downs. But if you're going to drop out too soon and then criticize somebody else, criticize the market, criticize the fund manager, criticize the distributor, criticize everybody, तो ठीक है, वो सब चले जाएंगे. But then what will you do? So criticizing will not help. Understanding that what is going on, what should I do, add more, switch out, switch in, do whatever. You know, there are remedial actions at every point of time. So that is a positive discussion. Again, thanks to your interview, I'm now thinking about it. The positive way to look at this is, okay, what should we do now? Negative way to look at it is that get the hell out of here. These guys are untrustworthy. ये हमको लूटने आ गए, हमसे पैसा कमा के हमको बर्बाद करते. ये सब क्रिटिसिज्म आती है खराब टाइमों में, राइट? तो ठीक है, you lose, then you catch a new mutual fund, you will catch a new distributor, you will catch some new asset class,
then the same thing
then फिर वो वापस कभी होगा. तो ऐसे मैंने ये देखा है कि if you're too reactive, then you don't make money. If you're proactive, you'll be lucky. तो अगर आप हर चीज में रिएक्ट करोगे और हर चीज में आप सेल का बटन दबाना अगर मजा आता है ना, तो फिर पैसे नहीं बनते. तो ये, और जैसे रामदेव जी भी बोलते हैं कि यार इन्वेस्टिंग इज ऑल अबाउट. आप बफेट को सुनिए ना. वॉरेन बफेट इज, व्हाट डज ही से? ही started investing $15, $20 at the age of 15. Today he is close to 100. So he has compounded for 85 years. And that $15 today is $1 trillion.
So it's a game. Big long.
अब वो 99 पे भी गेम में ही बैठा हुआ है.
Correct.
अभी भी जीरो नहीं है. कैश वैश, मतलब ठीक अपने इन्वेस्टिंग के हिसाब से उसका कैश है, लेकिन he is still in the same game. उसमें यूएस की इकोनॉमी 85 इयर्स में कहाँ से कहाँ पहुंच गई. राइट. 4-5 ट्रिलियन डॉलर की इकोनॉमी आज 30, उससे कम ही होगी एक्चुअली. 1 ट्रिलियन की होगी उस समय पे. 1 का 30 ट्रिलियन डॉलर हो गई.
And you know, he says that he was lucky to be born at the right place at the right time.
And we are all lucky to be born in India. After 20-30 years, we'll also talk like this.
So, Akhil sir, आपने अपने पेन पॉइंट के बारे में मैंने आपसे पूछा. मेरा भी एक पेन पॉइंट है. अभी भी I believe we bring a lot of value to the investor. जैसे आपने मेंशन किया, फंड पोर्टफोलियो रिव्यू करना, उनका, you know, a lot of things, a lot of efforts go beyond selecting a portfolio. Then making sure everything is in place, talking to them, being there with them at every point of time whenever they need us. But still, you know, this 60-70 paisa of brokerage, and there are companies, I don't want to name, वो उनको इतना बड़ा दिखाते हैं वो अमाउंट बड़ा करके कि ये 70 पैसे से आपका डिस्ट्रीब्यूटर will be richer than you in next 10, 12, 15 years. Right? What would you say with your wisdom to those people?
मैं तो यही बोलूँगा कि दूसरे की कमाई पे मत देखो. वो डिस्ट्रीब्यूटर जो आपके लाइफ में वैल्यू ऐड कर रहा है और आपको हेल्प कर रहा है कुछ अपने गोल्स को अचीव करने में, आपको बढ़िया सर्विस दे रहा है, आपका ध्यान रख रहा है अच्छे समय पे, ख़राब समय पे, आपकी फैमिली के बारे में सोचता है, केयरिंग है, तो वो कितना भी पैसे वाला बन जाए उससे क्या मतलब. यू शुड होप एंड प्रे दैट ही बिकम्स मिलियनेयर एंड बिलियनेयर, एंड देन यू कैन बी प्राउड दैट आई हैव अ डिस्ट्रीब्यूटर हु इज अ मिलियनेयर एंड बिलियनेयर. तो एक चीज़ है कि दूसरे की कमाई के बारे में नहीं देखना चाहिए. आपका काम क्या है, आपका काम हो रहा है नहीं हो रहा है, अच्छे से हो रहा है अच्छे से नहीं हो रहा है, वो उस पर ज़्यादा ध्यान रहना चाहिए. तो अपने घर पे ध्यान दो, दूसरे के घर पे ध्यान मत दो. मैं तो ऐसे ही बोलूँगा.
Great. I hope our audience gets some of it and they understand the value of a good mutual fund distributor or an advisor.
Absolutely.
So as we are heading towards the end of the session, sir, I have a rapid fire round. I'll ask you a few questions very quickly. आपको one word answer करना without any explanation.
चलिए, okay.
Market at fair value. I have 1 CR. SIP or lump sum?
Market at fair value, I think both can be done. But if you have big money, you can go all in.
Okay. One book every investor must read and which is not about valuation or how to value the market, something that talks about behavior.
I think one of the most popular ones in the last few years is Howard Marks' Psychology of Money. Good book.
Psychology of Money. Great. Your fire number?
Fire number means?
Financial independence, retire early. Number where you decide, okay, now I'll hang my boots.
It keeps changing. It's
a number that you have right now?
I don't know, maybe 100 crores.
100 CR, great. 1 crore you have to put for next 10 years. One only. Large cap, mid cap, small cap.
Mid and small.
You can choose only one.
Small cap.
Small cap. Gold or equity for wealth creation?
Equity, obviously.
Warren Buffett or Peter Lynch?
Both are different. Both are different. Both coach you for different. Peter Lynch is really, absolute great stock picker. But Buffett is like a teacher actually. A lot of wisdom comes from there. So in this I will take both.
Okay. For passive income, rent or SWP from hybrid funds?
I think SWP better idea.
And again, timing the market versus time in the market.
Time in the market. No debate.
No debate around that.
You have to spend time in the market. You have to be in the pitch.
And
right?
stay.
To swim, you have to be in the swimming pool. Right? So you have to be there.
Right. So Akhil, thank you so much for sharing 2.5 decades of wisdom with us and with our audience. Any final remarks that you would want to put across for anybody who is listening to this podcast to make humongous amount of wealth?
So I can conclude by taking one of the things you spoke towards the end. Basically, think about your financial freedom. Think about passive income, right? So you have your core job to do, core business to do, but parallelly you should have some part of your capital allocation which can generate phenomenal wealth, which can then eventually give you that passive income which we talk about. You're not really dependent on your job or all of those things after 20-30 years, right? So try and do great capital allocation and do it for long term, very, very long term. We are at the right place at the right time, right? So be patient. But there are 3 things I would urge people to think about: vision, courage, and patience. Right? So have a vision that the companies in India will create great wealth. Participate in that. Have the courage to actually participate, and then have patience to live through all the ups and downs, to enjoy whatever you had visualized. So vision and courage are easier. Patience is difficult. But have that patience.
Nazar and sabar, as they are calling it nowadays.
Yeah. So shortcut बहुत कम लोगों के लिए चलता है. Shortcut, there is nothing called shortcut in wealth creation. It is a hard work, 10th standard खत्म करने के लिए 12 साल निकालने पड़ते हैं स्कूल में, right? जो डॉक्टरी करता है वो डॉक्टर का सर्टिफिकेट लेने के लिए 5 साल 7 साल लगने पड़ते हैं, तो वो उतने साल लगते ही हैं. तो हर चीज़ समय से ही होती है. उसके पहले हो गई तो यू आर लकी, नहीं हुई तो यू आर अ नॉर्मल पर्सन, right? So that is what I would suggest here. It's a great opportunity. Create a lot of wealth, great ideations, great platforms available to participate. Choose a good financial doctor, a good mutual fund distributor, take help, and stay the course.
What struck me the most today after talking to Akhil for 40-45 minutes is again the timeless wisdom that time in the market is more important than timing the market. So thank you again for watching the podcast and supporting us, and please subscribe to our channel. Thank you so much. Have a good day.